$2,988 an ounce. Huh. You mean gold has gone up 900 and about $48 an ounce since we made that forecast? Golden year for gold. Yep. January 2nd, 2024. And here we are, riding higher. So, $2.56 a week. Oh, do we get it right all the time? Of course not. We're human beings, but we'll put our track record up against anybody.
In today's news recap, silver price forecast. Silver sees upside above $33.40 on soft U.S. PPI and CPI Trump tariff fears. Silver price trades close to near the monthly high of $33.40 in North American trading hours on Thursday. The white metal strengthens as cooling United States consumer and producer inflationary pressures pave the way for the Federal Reserve, Fed, to cut interest rates in the June policy meeting. The U.S. Producer Price Index report showed that the headline and core producer inflation decelerated at a faster than expected pace to 3.2% and 3.4%, respectively, in 12 months to February. Month-on-month headline PPI remained flat while the core figure deflated by 0.1%. On Wednesday, the U.S. headline and core consumer price index rose by 2.8% and 3.1%, respectively, in February, slower than their estimates and their prior releases. Last week, Fed Chair Jerome Powell stated that the restrictive monetary policy stance won't long last if the labor market unexpectedly weakens or inflation falls more than expected. The scenario of lower interest rates by the Fed bodes well for non-yielding assets such as silver. On the global front, escalating economic risks due to U.S. President Donald Trump's tariff agenda have also improved the safe haven demand of the silver price. On Wednesday, Trump confirmed that he will respond to counter tariffs from the European Union. Such a scenario would result in the EU-US trade war, which will diminish the risk appetite of investors significantly. The cautious market sentiment has also increased the safe haven demand of the U.S. dollar, but U.S. economic risks and soft CPI report have capped its upside. The U.S. dollar index, which tracks the greenback's value against 6 major currencies, rises to near 103.80 from its 4-month low of 103.20, which it posted on Tuesday. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps, and check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
So going on to the markets, the S&P down 1.39. Oh, it's in correction territory. Correction territory? Means down 10%. And how about that NASDAQ, huh? Let's see. The NASDAQ, it only fell almost 2%, with Tesla and Apple falling lower. So now you have the NASDAQ. Remember, dot-com bust, February 4th. The NASDAQ now is down 14% from its high. Goes down another 6%. That's called bear territory. Yeah. Bear territory. That's how much it's sinking. Trump took to his social platform Thursday morning, threatening 200% tariff on all alcoholic products. I love this one. Coming from countries in the European Union in retaliation for the bloc's 50% tariff on whiskey. Quote, "This will be great for wine and champagne business in U.S., he wrote. I got to tell you, the wine and champagne ain't my favorite in this country. I like other stuff. But, Give me that prosciutto from Italy and that champagne and wine from France. Yeah. Anyway, the NASDAQ, blah, 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 blah. These tariff wars are intensifying before they're abating. It just adds to unpredictability and uncertainty, and it's negative for stocks, obviously, said Jed Ellerbrook, portfolio manager. This is CNBC for Argent Capital Management. So, again, gold is spiking. The dollar's going down. And when the markets go down, Trump is going to lower interest rates. I will bet anything on it. We don't tell you what to do. We just give you the trend forecasts. And my bet is gold's going to go a lot higher because they're going to lower interest rates. The dollar will go deeper. The deeper the dollar falls, the higher gold prices go because gold is dollar based, like a lot of commodities. So they could buy more of it. And the central banks are buying it up. Data is there. And Bitcoin, let's see, 80,000 point, almost 80.5. So Bitcoin's lost its shine. Gold is shining. And it's going to be hard for Bitcoin to outshine gold. I mean, it could happen because Trump could make up anything, do anything. Again, you got the crypto club donated over $100 million. You know, you're going to get paid back.
In today's news recap, gold nearing $3,000 becomes top performing asset in 2025. Gold prices are printing new highs in 2025 and are among the top performing assets in the commodity markets. The gold index shows the precious metal trading at a day's high of $2,948 in the charts. It is now on track to hit the $3,000 mark and hit a new all-time high. The glittery metal has surged 12.15% year to date, generating remarkable returns to investors in 2025. The U.S. stock market crash has led institutional investors to take an entry position in gold to protect their wealth. The metal has always been seen as a safe haven against market turmoil in times of economic uncertainties. Dow Jones is down for 4 consecutive days, sparking fears of a bigger crash in the markets. Therefore, gold prices are gaining from the market tensions, making it reach new highs in the indices. Apart from institutional funds, central banks of developing countries and retail investors are heavily accumulating the metal. This adds to the positive price run as the buying pressure is only increasing this year. Gold has not seen a decline in buying pressure since February 2022 after Russia invaded Ukraine. The price has been on a steady rise since then and printed 28% gains in 2024 alone. It continued the rise in 2025 and is well positioned to reach the $3,000 mark next. The decline in the stock market is beneficial for the glittery metal as all eyes are on its performance. Gold has traditionally been seen as a hedge against inflation, said Ross Norman, CEO of Metals Daily to Kitco News. As inflation rises, gold prices tend to follow suit. Although this pattern holds in the long term, over the short term, it is behaving unexpectedly. In 2024, with inflation rates in the West declining fast, gold has bucked this trend, accelerating rather than slowing down as one might expect. He summed it up. Now we'll show you the best clips of the latest interview, but first hit the like button, smash the subscribe button, and check the pinned comment because we're offering an exclusive discount on NordVPN, an essential tool for gold and silver stackers who value privacy and security. Make sure you safeguard your online activity and protect yourself from prying eyes.
So on to some other economic news. No, I didn't say news. I said news. I don't like economic nudes. I like those other nudes. Okay. U.S. budget deficit surged in February, passing $1 trillion for year-to-date record. And there are a lot of relevant concerns coming out about the debt. You ready? The deficit swelled in the first 3 years of former President Joe Biden's term, growing from $1.38 trillion to $1.84 trillion. And it went up, of course, during Trump's terms. For the year, the deficit totaled 1.15 trillion through the first 5 months of fiscal 2025. The total, it's roughly 38% higher and set a record for the period, the same time span as 2024. So this is serious. And again, I like this Doge stuff, get rid of, bring down the cost, but it's two-faced coming out of Trump's mouth because he wants to lower the corporate taxes, which means even less money will come in. And that's part of this, by the way, when he did that back in 2017. So when you're talking about the deficit, guess what? It's costing the government and we the people of Slavelandia. Research shows link between high government debt and rising prices. This is a study done by a guy at the Yale University, the budget lab at Yale. So this has serious implications. Again, gold keeps shining. American and United warn of lower air travel demand. Things are slowing down. Business confidence falls. It's right here, keeps going down. Canada, they cut their interest rates. Yeah, because the economy's going down. Oh, that when Biden and Kamala Harris were running against him in November 2020, they said this Operation Warp Speed jab is no good. Trump pushed it through. So he got elected. And then they pushed it through. So, which means to say they're all full of shit. So going back to the markets, let's go back a little over a month ago, February 4th. This was the cover of your Trends Journal. .com bust 2.0. Ready or not, here it comes. Tell me any magazine that had forecast that. Tell me any magazine that had forecast the golden year for gold and a gold boom. Tell me, and that's the one I'd like to go to because none of them done it. And we're giving it to you. So here you go. Today, this is CNBC. Stocks fell on Thursday with equities unable to shake a 3-week market rout under the weight of new tariff threats from President Donald Trump. The tariff threats are only part of this thing. There's a lot more going on. Again, .com bust has nothing to do with tariff threats. And what do they say over here? 3-week. Oh, we called it over a month ago. That's right. It's going on for 3 weeks. Here it is. You can see them. All the forecasts we had made. And we go back into December. Markets down, hopes high. More war coming. We said it would crash right back then. January. .com bust 2.0 will go way up. World economies down. .com bust again, one after another. February 7th, gold shining, market gloom rising. So we're giving you what nobody's giving you. And the more subscribers we have, the more we can help change things in a positive way. You can't do it on your own. You can't build a skyscraper on your own. You need support. And we're only the Trends Journal. We need the support to make that skyscraper rise. So we rise to a higher level because that's everything we're doing.
What's your take on Celente's new outlook? Do you think $3,000 gold is realistic this month, or are there more hurdles ahead? Will central banks continue to gobble up all the gold? It's funny that Gerald Celente has shifted his forecast after being bearish for like 2 weeks, becoming bullish on gold as he sees current market conditions driving prices higher. Share your thoughts and price predictions in the comments. Let's see how this plays out in the coming weeks. Now, watch this video right here because it's a perfect fit for you, and I'll see you on the other side.